often hear that when we are saving for retirement, we need to have a long-term investment strategy. But the reality is that that's easier said than done when we are all bombarded by information on the here and now, on what's happening in markets today or this morning, or what might be expected tomorrow. And that becomes very difficult to stay focused on the long term. So we took a look at the long-term history of different types of investments and different assets to try to get some lessons from the history of what has happened to investment markets. And for us, there were probably 4 key lessons that we learned. The first is that investors need patience. And we know this, but it's something that's difficult to do because we live in a world of instant gratification. So patience is really the friend of the investor, and the reason is that compound interest takes time to work. So this graph shows just how important it is to be patient. And what you're really looking at here is an investment of 1,000 Rand at the end of 1974. So it's a long time back. So what you can see is that 1,000 Rand invested in the stock market would have grown to nearly 1.4 million Rand. That sounds like an astonishing amount of growth, and it is, but remember, this is over a long period of time, and hence the importance of taking a long-term view. What's also important to note on this graph, though, is that that is an investment of 1,000 Rand in the stock market. If you had invested that same 1,000 Rand back in 1974 into a bank deposit, you would only have 131,000 Rand. So even though that is a big improvement over the 1,000 Rand that you invested, it's not 1.4 million Rand. So patience and taking some risk is the second measure, or the second important lesson that we learned. You do need, as a long-term investor, to take some risk, invest in those asset classes that are likely to really deliver exceptional returns over the long term. And that means exposing your investments to the stock market. The second graph that we can show you, though, says that you need some courage. You do need a long-term perspective, but there are going to be bumps in the road. The stock market does involve periods where you can see here the green spikes downwards is that investments can lose a substantial amount of money, and in fact it can even take a long time for those investments to recover, but they do generally recover. At every crisis in the past, eventually the stock market gets back to where it was and continues its upward trend. So important to have some courage. The next picture that we've got here shows just how important it is to take that level of risk by investing in the stock market, as opposed to being in the safety of a bank or a cash investment. What we're really just showing you here is the blue shaded area is where the stock market outperforms an investment in the bank over a 5-year period, and the orange area is where cash or the bank deposit outperforms the stock market. And you can see it does happen. Sometimes cash does better, but you can see there's a lot more blue here than there is orange. In other words, taking that extra risk, staying invested for the long term does pay off. Over time, equities or the stock market has outperformed an investment in the bank by on average 6% per year. That's a very big increase in return, especially when you compound it over a long period. And the final graph just to take a look at in terms of history is this colorful tapestry. And really all it shows you is that each of the colors on this graph is a different asset class or a different type of investment. And what you can see is there's really no pattern to this picture. Sometimes the yellow is on the top. In this case, the yellow is property. Sometimes the pink is on the top, which happens to be global bonds. All of these different investments have their day in the sun. You just don't know which one's going to be. So we don't know what 2021 looks like at this stage. What we do know, though, is that if we spread our risk, we don't put all of our eggs in one basket, we diversify, we have a little bit of exposure to bonds, the stock market, property, cash. Over time, we will not only smooth out our ride, but we will deliver or we will achieve the good returns that we need. So those are just some of the lessons from a quick look at the history of many decades of investing.